What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock, what you should be looking after for the future. I'm also going to break down why tomorrow is going to be an absolutely massive day for the markets, for Tesla, for the stock market, and the share prices going forward, because we have the CPI report coming out. So I'm going to go over what the expectations may be, how this may affect the markets, and why this is going to be so massive. I'm also going to end the video by talking about some news from the man, the myth, the legend himself, Elon Musk, as we are seeing some big developments for Tesla in California. Now, before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner, so don't take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 10 free stocks, each worth up to $2,500. And the best part is, out of the 10 free stocks, 5 are going to come from the wheel right here. This means that you could win 5 free AMC shares, 5 free Apple shares, 5 free Tesla shares, or a mix of all of them. It's a limited time offer. The offer ends in just 2 weeks. Check it out before they run out. With that out of the way, let's get on with the video. So Tesla was down about 2.44% for the day, very close to what we had anticipated, except it did actually hold above 830, a little bit better than I would have thought. But other than that, it was very, very evident that this thing was taking a bit of a hit, and not just Tesla, but the whole market was taking hits left and right. If you're looking at NEO or Redbox or anything else out there, you were just seeing so much red all over the place. And that's because we had CPI coming out for tomorrow, and the market is getting ready to price in what may end up coming. So I want to actually talk about why this is going to be so important and what this could actually lead to for Tesla and the markets. So CPI is coming out tomorrow at 8:30 a.m. Eastern time. It's going to be very, very important. So right before the market opens, 1 hour before the market opens, it's coming out. It's going to be for the month of July. They're going to talk about why on earth it's going to be so huge. So what's going on right here is, I just need to mention that CPI is not 100% accurate all the time. It's not always going to be perfect. It is actually manipulated to some degree, but this is what the market uses and accepts, which is why it has so much value. So as of right now, I want to let you guys know that energy is making up a big sector in it, and we are seeing a big change in the energy side of things. So if I actually look at expectations from many economists, it says right here, economists expect inflation to have decelerated from 9.1% to 8.7% year over year. And also, that's just the overall CPI reports. But if you look at core CPI, which is excluding food and energy, that's expected to have accelerated from 5.9% to 6.1%. So that's actually not the best of signs for the markets, but I'm not necessarily just, super pessimistic from this point, because I still think that there is some hope that the markets could actually respond positively. Because when we look at the data right here, what you're noticing is the overall CPI has been just on this upward trend, and almost every single month we've been seeing a bigger increase over and over again, except for the month of April. But overall, it's still on this uptrend. So many people, including Elon Musk, theorized that right over here from June, this is the peak, and it's going to start coming down from now. So I would really love to see that happen. And we are starting to see all items less food and energy, so excluding them, that was on a downtrend too, but it's expected to actually have increased a little bit for the month of July, but overall it's expected to decrease a bit because energy makes up a big sector of this. If we look at the data right here, check this out. This is actually good news. We could see, if you look at all formulations of retail gas prices, so this is like the average gas price in the USA for retail, you'll notice it was on this crazy spike going into like 2022, then it actually decreased for July. So the peak appeared to be around June, and since then it did go down. Just to give you the specific numbers, right here, the average for June 2022 was about $5.03 per gallon. But for July, it was about $4.67. So it did decrease to some degree. And this is why it is expected to see, a bit of a decrease in CPI if you do include energy. But if you exclude energy, it may have actually gone up. So that's where things are kind of in the middle right now. So right now, the market is not too happy about this. They're actually very cautious right now, and the market's getting ready to price in a more hawkish Fed for September. We can see there's a 67.5% probability of us getting that 75 to 100% basis point. So that's going to be very big, 75 to 100 basis point, which is 0.75 to 1%. That could be very big for the markets as well. So the markets are very cautious right now. And as Jerome Powell stated, his moves are going to depend on data. Now, the Fed doesn't use CPI because they focus more on PCE, but this could actually be very big for PCE as well. So that's something you have to keep in your mind. So what's going to actually play out? And this is where things become very interesting. So if overall, let's just say gas prices decrease to some degree, and let's just say hypothetically core CPI, so that's like other things excluding food and energy, there's just other things you have to pay for. Let's just say those all went down, and we get somewhere between 8 to 8.5% overall, and core CPI is down, right? That would be pretty good for the markets because it would show us now, what Elon Musk stated and what many other economists are theorizing, that inflation peaked in June, that it's going to start coming down now, that would actually confirm it, and it would make a lot of investors think we saw the peak. So the market could respond very positively to this over the next couple of weeks, maybe the next couple of days as well. So this would be a very good report in my opinion, anything between 8 to 8.5% or lower. Now, if we get something around like 8.6 to 8.7%, that would still be okay. But remember, 8.7% is what the expectation is. So anything like at expectation or a little lower would be okay for the markets, as long as we don't see core CPI go up too much, because we know gas prices went down. We're just not too sure about the other things just yet. Now, anything around 8.8 to 8.9%. If you see this number tomorrow, that would be pretty bad for the markets because it would be above expectations. Now, the market's very weird. Sometimes it could just rally out of nowhere, even if we see news like this. And I know it's very capricious, but I just want to put it out there. Like from an economist lens, this would not be good because it's still pretty close to that 9.1% mark from June. And it would just show that now CPI would be inflated by not energy, but other commodities, other prices as well. So it would not be a good sign if it's like 8.8, 8.9% or something like that. So anywhere between 9 to 9.1% would be pretty darn bad for the markets. This would cause the markets to take a bit of a hit. And remember, 9.1%. All right, 9.1%. That is where we were last time CPI came out. And if it's not necessarily too far from this, if it's very close to it, that would not be a good sign because there would still be some signals out there that it could even go higher, and the market would most likely not like this. Now, the worst possible thing that I think makes it extremely likely for the market to actually crash would be a 9.2% or higher CPI report, because it would show it's actually getting worse. And once again, this is extremely unlikely because of how much gas has dropped. But if we somehow end up seeing it this high, if somehow that happens, you should always be prepared for anything, right? If that happens, the market will most likely crash horribly. Now, I hate to say that, and it's very, very unlikely. And I think we're most likely going to get something around here. I would say between 8.6 to 8.8%. I can't really predict it perfectly. That's what a lot of people are thinking. And that's for the overall CPI report for everything. But if you exclude food and energy, then the expectation would be about 6.1%, so a slight increase. Now, I'm hoping that's around 6% or lower. That would be pretty decent as well. It wouldn't be too bad. And with that said, I think CPI is most likely going to be lower than what we saw from June, but it won't be perfect. It may still be a little bit high. Now, as far as the reaction goes from the market, it could really go either way depending on how the market interprets it. But if it's really, really, really horrible, like I said, if it's really horrible like this, that's like almost like a guarantee the market will most likely take big hits again. But right now, I'm not seeing that. I think we're most likely going to get something like this. But anyways, just to prepare you guys, I don't have a specific price prediction because it's very dependent on data. But let me just show you where support and resistance levels are. So right now, Tesla's been holding around that $840 range pretty strongly, pretty well, but there's no guarantee it's going to hold this because it depends on the data. If the data does not come out too good, there's a risk Tesla could go as low as that 830 mark. If it doesn't hold 830, then I would look at 815. And if we somehow end up testing the 800 mark, I think that's a very key zone, because if we hold 800, that would be a decent sign. But if we can't hold 800, Tesla would have to make a very big drop to get there. Obviously, it would not be good. Here's what I'm seeing. There's a gap. Let me actually show you the gap first. Way back here, somewhere back here, there's a gap right here. And you guys can see it right here. So Tesla has a gap all the way down in the 776 mark. Now, does this guarantee that this has to get filled immediately? The answer is no, right? But if we can't hold 800, if inflation is very bad, or somehow the market just responds very negatively to this, and Tesla tests 800 and it actually breaks below it, I believe if we break below 800, we're most likely going to end up filling this gap either like the next day or a couple days after, and then we should get a bounce after that. But that is just one of the risks involved. I can't guarantee that's going to happen, and I think it's very unlikely, but it is something to just keep in your mind in case things do go south. Now, what am I seeing from here? If things are okay and the market eventually starts to rebound, that's also very possible. Tesla's going to have resistance at 856, actually. It's around 856, 858, around that range. And if we break past that, which is very possible, then this thing is going to be testing the $880 level of resistance. If we break past that, then 900 is going to be on the table. And past that, then around like the 910 range, 915, going as high as like 925. So what am I seeing specifically? I think we're more likely to actually see lots of volatility and maybe push up a bit, because I don't think CPI is going to be that bad. I'm just going to try to be optimistic, but I can't guarantee that. So I'd be looking specifically at 858 to 880 for tomorrow for Tesla, but I can't really guarantee anything because, like I said, it depends so much on the data and how the market really responds. As far as SPY goes, one of the things to note about SPY that's a little bit bearish would be this right here. I think the SPY has a gap around 408. Let me actually find it real quick. Somewhere right here, if I could find it. Right here, we have a gap around 408, 409. So it is possible for the SPY to come down just a bit for tomorrow, but I'm hoping for a nice bounce and a nice push up. That would be a good sign for SPY. Now, if we look at the EMAs on the daily, excuse me, on the EMA, you could see the SPY has resistance at the 200 EMA. So I would like to see it test this in the future. And if we could break past it, that would be a good sign for the markets. But there's no guarantee that it's just going to start rallying to all-time highs, as I mentioned before. As the big FOMC meeting comes up next month, I do think the SPY is going to start taking a hit a little later. As for Tesla, I don't think Tesla's in the same boat. I do think Tesla could see more downside if something were to go south, but it will push up again to this gap all the way up here around the 920s. I really believe it will as we approach the big stock split date. So as of right now, I feel this way, but my opinion could change depending on CPI. All right, so be prepared for that. Be ready for tomorrow. Very important day. And pay attention to these zones. I kind of highlighted these not to say the market's just going to be green, but it's more like just say what's really good and what is likely for the market to do, right? So if CPI is really, really low, the market's more likely to respond positively to it. If CPI is super high, the market's more likely to respond negatively to that. So I just wanted to make that clear. Anyways, when it comes to good news for Tesla now, I want to talk about something else that's very good. A report came out and we could see that Tesla Model 3 and Model Y have become the best-selling vehicles in California, pushing EVs to a new record. Once again, absolutely incredible. And we know that in California, it's notorious for seeing a lot of EVs now kind of like joining in. And that's amazing to see. But on top of that, we're seeing a big change in the production phase for Tesla as well. Now, people have different views politically. I totally understand that. But in my honest opinion, I do see this as a good sign for not just Tesla, but for the economy of California and big people out there, because the EV revolution is already starting and it's getting bigger and bigger and bigger as California is a massive market. Now, it's such a massive market. Elon Musk also mentioned this about it. Musk said the Tesla Fremont team is kicking butt. Okay, I'm going to try to keep this appropriate. But anyways, Musk is making a very, very good point. I 100% agree with him. And remember, Tesla has that target of a 50% growth year over year. So as we mentioned, as it was mentioned in the annual shareholder meeting, Tesla is pushing very hard to ramp up production, specifically in Fremont and other places too. But in Fremont, it's a lot more notorious according to Elon Musk. But it's incredible because they're trying to ramp up production to meet those demands, to meet those goals. Musk did talk about 50% growth being a projection. That's very possible. And to me, it's absolutely incredible. So huge shout out to the Tesla Fremont team. I think they're doing well, and I really believe they're going to meet their goals. I'm so optimistic and so bullish for its long-term future. For the short term, it's very capricious right now. It's very unpredictable because it depends on inflation, how the Fed will respond. If inflation is still very, very high, I forgot to mention this part, the Fed is going to be most likely a lot more hawkish. And I would say a 100 basis point rate hike is not off the table right now. It still is in the realm of possibility if we still see CPI at these high levels. But as of right now, I'm looking for somewhere around this range. I'm still pretty optimistic, and I don't think the market is going to take a huge hit after it comes out, maybe temporarily, but I'm going to remain optimistic for now. So be ready. And in case my optimism doesn't work, it is still possible for the market to take a bit of a hit, which is why you need to be prepared when trading and looking at these levels. So pay attention to support and resistance levels, watch your indicators, and see what the chart is telling you, because it's the chart that helps you trade. It's the chart that helps you make money. And with that out of the way, thank you all so much for listening. Tesla to the moon, because the long-term future is very bright, and peace out.